XRP and XLM holders, the market just flipped, and I've got the data to share with you. We're also going to talk about Jerome Powell, the Fed.
Due to the graphic nature of this program, listener discretion is advised.
Well, happy Sunday to you all, and what a wonderful couple weeks it's been. Let's hope the action is juicy for the next few. Hey, by the way, I've got a vote for you down below, a poll, I guess. Is this the top of the crypto market rally? Options are yes, we're at the top, and no, we got more to go. But before we get into the crypto news, your comments come first. Hot, spicy, naughty, relevant. Maybe I'll share it at the beginning of the next video. Laura Davila says, I value truth above all. Moon boys and girls can cause damage even if they didn't mean to. Thanks for the full disclosure. And yes, full disclosure, I've got news to share with you, and it's not good news today. But is there enough good news to outweigh this market change that just happened? Kaipo says, regs, Gensler out, RLUSD launch, ETFs, DEFI and XRP ledger. That's what's going to keep XRP run going. Did I miss anything? Well, you missed a little bit of stablecoin flows over in the market. Juicy stuff. That's the point of this whole video, right? I've got some bad news to share. But as Kaifo says, there's a lot of good news out there. Will the good news outweigh the bad? Let's see what the bad news is, and then we're going to talk about it at the end. Bitcoin sitting at 90,369. Well, ETH is 388. Sol at 234. While BNB at 625. XRP holding on to the dollar. That's important. $1.08. XLM now holding on to 20 cents, but still very strong at 19.5. We're starting to see a little bit of softness showing up in the market. Certain things, yeah, are still ripping and roaring. Other things are kind of cooling off, but everyone, it's the weekend. This is when we're supposed to be chilling the F out. You can't go full bore all the time. For real, even me a few days ago, I was like, yo, I got to take a break and do 2 videos a day instead of 3 or 4, because even I was like, this is just a lot of excitement to take. All right, here's some exciting news for you crypto fans out there. Gold loses some luster after Trump's decisive win. This is what was said. When people really get interested in gold, it's when nothing else is working, said Rob Hayworth, Senior Investment Strategy Director at the U.S. Bank. Equities are working well. You're even seeing solid returns for low-quality corporate credit, so you're less likely to see out alternative successes for portfolio growth. Basically saying even pieces of shit are looking good right now. So there's a lot of capital flowing into the market, and gold is a very safe bet, right? Like a safe haven, a hedge against shit just going south. So what he's saying is even piece of crap debt stuff is going for good money now. The market appears to be willing to take the risk. And that's what we have to judge here, right? Is the data that I'm going to share with you bigger than all of the good stuff that's been going on and that will continue to go on? So you are starting to see the gold market soften up. Now, what's really cool about this is look at this chart. So this is BTC compared to gold. Gold is in the blue right here, and BTC is in the pink. And look at this. This is over the last month. Gold is down 4%, while BTC is up 33%. And we know a ton of the alts have been up along with it. So kind of just imagine the alts being in here as well. Zoom out a little bit more, and you're like, oh, gold, yes, obviously looking better at 7%, but BTC up 34%. So what's happening is companies, we talked about MicroStrategy, we talked about the U.S. creating a strategic BTC reserve, we talked about companies out there freaking out because they're like, we didn't get into crypto, we didn't invest into crypto, so we're losing out. So even those players that get into gold, they're like, yo, we've been doing good, 7% gains for gold in 6 months, that is good. But here's the thing, 34% gains for BTC is even better. And since you're seeing more players going into the BTC crypto alts as a store of value, retirement, all sorts of different financial tools, you're seeing a definite tilting of things. More stability in the market means gold is not needed as much, right? What do we use gold for? To hedge against the bad stuff happening. So crypto is looking pretty hot, taking some money from gold. Where are we at in extreme greed? Yeah, we're up there. We're at 83. We way high right now. Stablecoin market cap increasing. Highest it's ever freaking been. Stablecoin. So now you not only have more money being built on the sidelines, stablecoins that could flow into the alts, but you're also having a lot of volume and a lot of people storing their value in crypto-based products. That goes back to the original story of gold and how people are pulling money out of gold into crypto. You're seeing people pull money out of other asset classes and putting it into stables. And it's like, all right, cool. If you want to dip your toes with stables, you want to play with alts. You want to play with some maybe a little bit more risky crypto. And then all of a sudden you start getting them more and more involved into the alts that we all love. Now, here's where the bad news comes into play. Remember, I bring you the news whether it's good or bad, happy or sad, okay? So on these bad news videos, you really got to help me out and hit the subscribe button because people get pissed when I bring bad news. For real, like it's my fault. But I have to share with you because that's like my thing. I really believe in honest journalism. I believe in bringing you the truth, even if it hurts. U.S. inflation rose 2.6% in October, a month after the Federal Reserve began cutting rates. We're going to talk about this in the effect how, yes, we were able to look past it on a day basis, right? On the day that this news broke, it was like, all right, cool. We digested it because there was so much good news happening. But this created a trickle effect that built up into something big that I'm going to share with you. That matched forecasts from economics polls. FactSet that the consumer price index rose 2.6% in October. CPI rose 2.4% in September. Remember, the Fed's goal is 2%. The slight rise month over month basis signals that the Fed's battle to tame inflation might take a bumpy path. Looking ahead to the next 6 months, we foresee consumers and businesses still spending, but doing so more prudentially amid still elevated costs and rates, thinking that rates are going to be higher for longer. So now look what happens here. This is the contract for March. So you got the Trump presidency taking over. The Trump presidency will have been in effect by now. March, you've got a good amount of data from now until then. So a lot of things can happen. But look what shifted with the market. And this is where we have to start asking ourselves, is the optimism that we're seeing with the rest of the stories with crypto, with the things that you're thinking about, the stablecoin launches, the alts making moves, even NFTs are freaking pumping. Will that be able to override this? And here's what happened. All right, so rates right now are at 450 to 475, and I've got some target expectations here. Right now, for a 375 to 400, which would mean juicy cuts by March. I mean juicy cuts. The odds have gone down heavily. 1 month ago, the odds of getting that big of a cut, like you're getting like 100 basis points of cuts, like big stuff. Dude, 46%, and now it's only 11%. So the market really shifted on data lately, saying, whoa, let's not lower rates that fast. Now, the reason the rates lowering is a big deal is because as rates come down, you could take more risk because it costs you less. And this is on a global scale too. It's not just the United States. It's every country in the globe is really similar in situations like this. So all of a sudden you start going, oh, okay, is our good news going to be able to outweigh this? Now you want this on your side. This doesn't mean the rally is over. It just means there's not going to be as much money that could flow in if money remains expensive. This is something that you want on your side. I don't see this as a deal breaker. Where we're at right now, look at this, all right? 1.3% chance a month ago that we would have pauses. Now it's a 10% chance. So you're seeing a lot of hawkish sentiment being pushed right now into rates, which is not good for crypto. Will it break it? No, but I don't think this is something you want to fight against, especially if we start looking further out into the June contract and you still don't see the change. And these numbers are very different. So the market is definitely flipped on new data. Now let's take a look at XRP price. We're still above the dollar. I love seeing it. Zooming out to the month, the chart looks amazing. Look, we talked about being rejected above 125. We talked about having support above the dollar range. Right now we're at $1.08. Volume is starting to go down, okay? I talked yesterday about volume being $21 billion. Volume right now is 15.79. So you're starting to see the weekend cool off take effect, which is okay. You can't rip roar all the time. You cannot hammer the gas pedal financially all the time and expect markets to just print green candlestick after green candlestick after green candlestick. You just can't do it. Now, zooming in to the candlesticks, we're going to hang on out with the 15 minutes so we get a good look at things that have been standing out. And I think we all can digest this. Like I said, I talked in the earlier video what my targets are. They're still staying the same. Right now, I'm not thinking too much unless we start touching again just below this 105. All right, I'll start paying a bit more attention around 105, 103, 104. But we've seen that we've had the support here. We've had the support here above the dollar. So if we hold that through Sunday, through the volume starting to cool down a little bit, And then we kind of kick it off again on Monday, because then that's when the news cycle fires up. That's when you're going to hear about more Trump news. And that gets me to my original question, which is, will the data we got regarding rates being a bit more stingy hurt the crypto rally? Will it stop it? Will it be something that the market just goes right past it? My thoughts are this. I don't think it's going to stop it. There are tons of bullish factors out there on the horizon, and I think we're all super excited about that. Now, is it nice to have lower rates during a run like this? Oh my gosh, yes it is, because then you just add more zeros to it because you could take more risk, and crypto is still super risky. But think, even the NFTs are pumping now. The big pieces of shit in crypto are pumping right now. So imagine if you had that with money that was less expensive. On a global scale, that's when you start stacking zeros. That's when volume can stay high. Rates are still a bit high now. So like I said, I don't think this stops the rally that we're in. I do wish it was on our side and we could still see some favorable reports, but if inflation stays up, they're going to keep rates up higher for longer, which stifles the growth, right? That still stifles business development. It still stifles Web3 development. You can have all the good crypto regs in the world you want. If it's still expensive to build, still expensive to build. So let me know down below. The poll is linked down below. Vote now, and always choo choo bitches until I see you later today.